Good afternoon, everyone, and welcome to the Daily Volatility Box Report for October 3rd, 2019. We are TOSindicators.com, home of the Volatility Box. For today's trading, we had quite a bit of volatility after the ISM non-manufacturing PMI numbers came out, and so we'll talk about the trades that set up as a result of it. So with that volatility and also the earlier PMI volatility, we were on our conservative volatility box, which stopped us out even out of the S&P futures and the Dow futures. So both of these, we weren't really able to capture any fades. And in the note that we sent out to all of our members, we talked about how this was then our sign to just ignore these two markets. We did, however, continue to have some nice trades in the Nasdaq futures, where we had a total of 4 trades, all of which were winners for 23.90. And this is where our 20 and 25 point stops have panned out, essentially, where we were able to stay in a trade. I'll show you an example. We also had 4 trades in the Russell futures. 3 out of those 4 trades were winners, with the last one being a loser. And so that was a total P&L of 22.90. We also had 1 trade that set up in the 30-year bonds, and this should have been a winner. It was a loser, and this is my fault. This happened when the PMI numbers were setting up, and we just placed our orders too quickly. But my order was so close to the round number, and so that's where it was a mistake in the stops given the activity that was going on. So you'll get to see that, but hopefully for those of you trading just the TLTs, you were spared, especially if you use the ETF options. So for today, we had a total of 11 trades in total, a total winning percentage of 63.6%, for a total P&L of 26.55 in the positive direction. And once again, the Russell proves to be a hero, which it doesn't typically do. So that was exciting to see. First, let's start by discussing the ISM numbers, right? And so this is where we can see the event that actually took place. What's the reason why we had, in my opinion, such a sell-off is because of the trend, right? The story that isn't told. I think some people focus on the fact that just because this number is above 50, it's a good sign. That's in fact incorrect, or at least in my opinion, the market even agreed that it was incorrect. And the reason is because our forecast was 55.1, and we came in even below our forecast, and we came in substantially below our previous PMI number. And so I think the story as a whole supported this idea that the economy is starting to stagnate. The market did not like that, and we puked until we had that rip higher. And so as a result, we sent to all of our members right around 7:30 this note in which we said that the NQ had broken outside of the volatility box and our bias was to be shorts only. The ES and the Dow had broken through both sides of the clouds, and so we were just staying out of those markets altogether. The Russell had stayed inside of the conservative volatility box, and we would continue to fade the edges until told otherwise. And this is exactly what we continued to do. The ZB had broken outside of the conservative volatility box, and we were looking at longs only, and we didn't have any other long opportunities outside of our stop out. Gold had broken outside, and so we were just staying outside of gold. And then crude was continuing to hold its aggressive volatility box, which is what we were on. And unfortunately, there were just no trade setups in crude for today. And so we had sent this note out to most of our members who I hope this helped. And a few of you emailed with who trade just to Russell. And so I think you had a really nice day. The Nasdaq traders only had a really nice day. It's really just the S&P and the Dow that were troublesome today. But let's take a look at the charts and go over all the trades. All right, so we'll start with the S&P, and we're on our conservative volatility box since we'll just start after the PMI event. We tried to catch the volatility box fall right here as we fell into our volatility box entry lines. And this is where, just like imagine all of these trades are setting up at the same time as a result of the PMI numbers. And so that's where that mishap on the bonds happened, where we used our typical bracket of 10 ticks for this hour. And unfortunately, that just stopped us out because of the even number. But anyways, back to the S&P. So we had our entry right here. Our stop was outside of the volatility box. We gave it 7.5 points of room. And that was taken out before we had this rip higher in the opposite direction. Same thing with the Dow. You had your entry, immediate stop out. We had given it 65 points of room, and that was taken out before we saw this rip higher. Now, however, if we look at, say, the Nasdaq was contained, and you had plenty of opportunity to get in. The only question is, did you continue to get in even after you saw the S&P and the Dow start to collapse? And that's where I think just the trust in the models, the importance, the idea that each market has its own volatility and trades differently is really important. And that's why we stress the fact of why it's important to not try and guess what's going to happen next, right? And we have our rules for a reason. So in this case, we had our entry right here at the volatility box entry line. Our stop was outside of the volatility box. We gave it 25 points of room. We were spared, I think, by 2 points before we had our move up higher, in which we hit both our first and second targets. So our first target was the same 25 points, which was hit, and our second target was at the target line, which was 44.5 points, both of which were hit for a T1 and a T2. Also, as we continued to hit into our T2, we saw that we had another opportunity to go short the Nasdaq futures, and this is where we had already sent out an email saying that we have our bias short, considering we had broken outside of the box in the bearish direction, and so we were only looking at short. So once again, 25 points. We made our 25, and our second contract was taken out at break even, and so we didn't get the type of follow through we were looking for on that second contract. But now at this point, we're looking only for shorts, and our next entry came as we had an opportunity to go short right here. Our stop was outside of the volatility box once again. In this case, I think, once again, we gave it 25 points of room. We hit the same 25. Our second target was at the target line, which was never hit, and so that second contract was taken off at a break even. And finally, our last trade was right here where we had another opportunity to short the volatility box. Our stop was outside of the volatility box where we gave it 20 points of room. Our stop was not hit, and so we didn't even get the follow through. And so towards the end of the market, you had an opportunity to just get out for a break even, which is what we ended up doing on both of our contracts. And so we just covered commission there. All right, next let's move on to the Russell future. All right, so with the Russell, same thing as we discussed with the Nasdaq, right? You saw price start to fall down on the other indices. It's important to recognize that not all markets behave in the same reaction, and the volatility box accounts for each market's individual volatility. That's what makes this tool so unique. And so once again on the Russell, we had an opportunity to go long and catch this price action. In the case of the Russell, just like the Nasdaq, we had a perfect bounce from the volatility box. Our stop was 4.5 points wide. First target was hit almost right away. Our second target was at the target line, which was 12.3 points. We hit it almost perfectly. And if you didn't get tagged out in that line, you still had another opportunity in this push higher. And so we hit both our T1 and our T2 for this first trade in the Russell. Now we were looking for an opportunity to go short just like the Nasdaq, but unfortunately we got close, but not quite enough. And so this wasn't an entry for us. Our next entry in the Russell came as we had an opportunity to go short right here. And in the Russell, we didn't really have a directional bias at this point, right? I'll trade the chop until I'm told otherwise. And so our stop was outside of the volatility box where we gave it 4.5 points of room. Our first target was the 4.5, and the second target was 13 points, both of which were hit in this flush down. And so we had a T1 and a T2, and that then triggered our second entry to go long and try and once again capture this chop. That's exactly what happened here once again, right? Our stop, same exact stop, 14 points wide, same exact target, same thing. So first target was the 4.5. We hit that first target, and the second target was also hit for 13 points for both a T1 and a T2. Now, our last trade in the Russell came right as we hit this target, so the two overlapped, where we had an opportunity to go short the volatility box. Our stop was outside of the volatility box, where we gave it 3 points of room, and that trade was stopped out as we continued to drift higher. And this is sort of the first sign where then we knew that, okay, even the conservative volatility box is not holding the Russell, and it's time to just sort of take the profits and run. All right, and finally, let's discuss the bond trade. And so in the bonds, right as price action was moving up, we had an opportunity to go long as price slammed into our volatility box entry lines, and our stop was 10 ticks wide, which is our bracket for this hour. Now we were taken out almost exactly for a tick, so this 164.31, and what I mean by round number is, so 31 is right near the 165 mark, and so typically you'd like to be on the other side of that, right? Your stop would at least cover you up to 165 because you would expect that price starts, 165 acts like a magnet and price drifts towards there. And so if things weren't moving a little too quickly, I think that's something that we would have easily caught and adjusted, but just given the nature of how fast everything was moving today, This was one of those casualties, and so we ended up stopping out of both of our contracts, and that was frustrating to see, especially in just retrospect, just seeing how silly of a mistake that is. But that's just to say that like these sorts of things happen, and the market's moving really quickly. So if you do make silly errors like this, it's perfectly okay. We're all human. All right, so to sum up, today we had a total of 11 trades. We had a total winning percentage of 63.6%. After starting the day off negative, I think, once the S&P, the bonds, and the Dow had all stopped out, the Russell and the Nasdaq were the gift that kept giving, and we were able to milk the volatility box and just start fading the edges, follow the plan that we had set out, and even emailed to all of our members to end the day positive, 2,655. Also, just a quick heads up, we're going to be having our next tutorial, the How to Think Script tutorials. We'll plan for it to come out either over the weekend or maybe later this week, but most likely over the weekend. And then we also have a subsequent tutorial, which is actually an indicator created by a member coming out either the following week or the week after. And so stay tuned. We have 2 awesome tutorials coming up, and obviously there'll be free indicators attached with each one. All right, take care, everyone. Hope you have a good night, and we look forward to trading with you tomorrow.